Hello, and welcome to this exploration of Countrywide Financial, the mortgage titan whose downfall epitomized America's subprime mortgage debacle. At its peak, Countrywide was lauded for making homeownership more accessible to millions of Americans. But behind the scenes, reckless underwriting, questionable marketing, and unchecked risk laid the groundwork for one of history's most devastating financial collapses. Let's trace the roots of Countrywide's expansion, the subprime wave, and its eventual demise that signaled the coming housing meltdown. In the early 2000s, U.S. policymakers and financial institutions pushed to expand homeownership. Historically low interest rates, combined with government backing for Fannie Mae and Freddie Mac, encouraged lenders to offer mortgages with minimal documentation or down payment requirement. Subprime loans targeted borrowers with lower credit scores or uncertain financial histories. Lenders charged higher interest rates and fees to offset perceived risk. Initially, these mortgages seemed profitable, especially in a rapidly appreciating housing market. But as competition heated up, many lenders, Countrywide foremost among them, loosened standards even more, issuing adjustable-rate mortgages, ARMs, with teaser rates destined to spike later. Wall Street turned these mortgages into mortgage-backed securities, MBS, and collateralized debt obligations, CDOs, selling them worldwide. Demand for these structured products soared, encouraging lenders like Countrywide to produce more loans, regardless of the long-term viability of the borrowers. This set the stage for a precarious house of cards. If real estate prices dropped or adjustable rates reset, default rates could cascade through the financial system. Founded in 1969 by Angelo Mazzillo and David Loeb, Countrywide initially specialized in conventional mortgage lending. Over time, Mazzillo envisioned building the largest mortgage originator in the nation, expanding aggressively with branches across the U.S. By the early 2000s, Countrywide boasted that it financed over 20% of all U.S. mortgages, from prime to subprime and everything in between. As the housing boom intensified, Countrywide introduced a suite of mortgage products appealing to borrowers otherwise deemed risky. Examples included interest-only loans, monthly payments covered interest alone, deferring principal repayment, adjustable-rate mortgages, low teaser rates spiking in a few years, no documentation, ninja loans, no income, no job, no assets, verifications. While these offerings expanded credit to more borrowers, critics argued Countrywide coaxed applicants with easy approvals and overshadowed eventual ballooning payment. Loan officers, incentivized by volume commission, had little reason to ensure borrower sustainability, especially as the loans would be quickly packaged and sold to investors. Countrywide's success hinged on swiftly bundling loans into MBSs, freed of default risk once sold. The firm relentlessly pursued volume over caution. External bond investors, rating agencies, and the broader market seemed content with short-term yields, trusting that real estate prices would keep rising. Countrywide reaped huge fees, fueling executive bonuses and marketing budgets that reinforced growth. In 2005 to 2006, housing prices began to stagnate in some regions. Subprime borrowers facing higher monthly payments from adjustable rates struggled to refinance or sell. Delinquencies and defaults crept upward, raising concerns. Internally, some Countrywide employees reported an uptick in liar loans and manipulative tactics used to secure approvals. Yet the corporate machine persisted, with Mazzillo often dismissing critics. A scandal emerged when it was revealed that Mazzillo had provided preferential loan terms, dubbed the Friends of Angelo program, to influential politicians and VIPs. This fueled accusations that Countrywide cultivated cozy relationships to avoid scrutiny. Public trust eroded as revelations circulated about the breadth of insider deals. As the crisis loomed, Mazzillo publicly expressed private concerns via emails, eventually uncovered, labeling certain lending products as poison or toxic. This discrepancy between public optimism and internal worries fueled speculation about potential fraud or misrepresentation. By mid-2007, credit markets tightened, and investors grew wary of subprime-backed securities. Mortgage originators reliant on continuous funding faced liquidity squeezes. Countrywide, with billions in short-term debt obligations, found itself on shaky ground. In August 2007, it drew down its entire $11.5 billion credit facility, signaling desperation. Countrywide's share price nosedived, reflecting eroding investor confidence. Fearing an outright collapse, Bank of America stepped in with a $2 billion infusion, hoping to calm markets. But the meltdown proved deeper than anticipated. In January 2008, Bank of America announced a full takeover of Countrywide in a deal valued around $4 billion, far below the company's prior valuation. The acquisition sought to prevent broader fallout, but saddled Bank of America with billions in mortgage-related liabilities. As the subprime bubble burst, millions of homeowners defaulted, triggering a nationwide foreclosure wave. Countrywide's brand became synonymous with predatory lending, fueling lawsuits and government inquiries. Many accused it of systematically steering borrowers into overpriced loans, ignoring borrowers' inability to repay once teaser rates reset. Countrywide faced lawsuits from borrowers, state attorneys general, and regulators. In 2011, Bank of America reached an $8.5 billion settlement with investors claiming they'd been misled about the quality of mortgage-backed securities. Angelo Mazzillo eventually paid settlements to the SEC over insider trading and disclosure violation, though he admitted no wrongdoing. These legal actions paled next to the social cost of widespread home losses. The Countrywide acquisition is often cited as one of the worst corporate deals in modern finance. Bank of America incurred tens of billions in losses, legal fees, and settlement costs tied to defective mortgages and investor disputes. The fiasco tarnished its reputation and forced it to reallocate capital to manage legacy mortgage suits for years. In the wake of the crisis, the U.S. introduced the Dodd-Frank Act, establishing the Consumer Financial Protection Bureau, CFPB. Tighter regulations on mortgage lending, including ability to repay rules, aimed to curb reckless practices. Rating agencies, securitization procedures, and bank capital requirements also underwent reforms, though debate persists over whether these changes fully prevent future bubbles. Countrywide became emblematic of the subprime meltdown, emphasizing high volume, minimal underwriting standards, and an assumption that property prices would never fall. It demonstrates how greed and lax oversight can converge, spawning a cycle that ultimately topples an entire financial system. Policymakers have questioned the push for homeownership at any cost. Countrywide's story reveals that easy credit, if unaccompanied by responsible lending, can devastate not only borrowers but also the broader economy. Lending expansions must balance societal goals of wider homeownership with prudent underwriting.